How to Invest in Mutual Funds for Beginners 2022. You have large chunk of change and you will put resources into mutual funding, yet you are an all-out fledgling and you don't have the foggiest idea what to do. Indeed, don't you stress cause we are here to tackle your concern. Hello everyone and welcome to Trendy Finance. Today, we will cover the aid for the amateurs who need to put resources into mutual funding in 2022. Putting away your cash can assist you with transforming $1 into some more, empowering you to create financial well-being without working harder. Because of self-multiplying dividends and an assortment of speculation vehicles, you can choose where to put your cash. One sort of speculation vehicle that can assist with differentiating your cash is a shared asset, which gets cash from financial backers and pools it together into an asset. These assets put resources into different protections like stocks, bonds, and transient obligation. Mutual funding are frequently effectively made do, yet not consistently. Now, let us move towards the basic strides towards mutual funding. Step 1. Look at your funds and objectives. Before you begin with putting resources into mutual funding, it's critical to initially survey your ongoing pay, cost, month-to-month obligation commitments, and total assets to see where you're at monetarily. You wouldn't construct a house without establishing a legitimate groundwork, and the equivalent goes with your funds. Having a secret stash and sensible obligation are significant to contribute. But why? Since effective money management is hazardous, regardless of your perspective, there are ways of limiting your gamble by sorting out your gamble resistance. However, it's vital you have that monetary establishment and well-being net set up. Knowing where your funds are at now can illuminate the amount you can stand to contribute and what your resource designation ought to be founded on your gamble resilience. In addition, consider your short and long-haul objectives while money management as well. Will this be utilized for an initial investment in 5 years, or on the other hand, for your retirement in 30 years? Knowing your objectives and having a harsh timetable can guarantee that you remain focused and realize the reason why you're putting resources into the primary spot. Step 2. Research kinds of mutual funding. As per the Securities and Exchange Commission, a shared asset is an open-end venture organization that is enrolled with the SEC and assembles cash from different financial backers to place into resource classes like stocks, bonds, and then some. At the point when you put resources into common assets, you wind up buying portions of the shared asset that reflects halfway responsibility for absolute portfolio. Mutual funding are bushels of different stocks with a typical subject behind them. For example, U.S. Equities Growth Fund or Manageable Developed Markets Fund. They for the most part have a net resource esteem, which is resolved one time each day, dissimilar to stock costs that vary during the day in the business sectors, says Gary Gruhl, a certified financial planner and creator of Monetary Fives, the top 325 ways to save, earn, and thrive to retire before 65. There are various kinds of common subsidizes that you can put resources into, similar to stock funds, bond funds, money market funds, etc. As a rule, mutual funds are effectively overseen by a speculation proficient. In any case, it's feasible to put latently in common assets also, ordinarily called a record store. Moreover, shared assets can be list assets as well as the other way around. Effectively oversaw common subsidizes work with an expert director whose fundamental objective is to assist you with beating the market. They do a significant part of the hard work with regards to picking protections to put resources into and survey the exhibition. Latently oversaw reserves like record reserves have a goal to match the consequences of a specific file and don't have an expert director. In that capacity, it's an uninvolved method for money management as there's no external assistance. No external assistance ordinarily implies brings down costs. To enhance your speculations, you'll need to put resources into different kinds of common assets, and not only one sort in a particular area. Step 3. Choose an inactive or dynamic methodology. Subsequent to investigating the different sorts of shared assets out there, you need to be clear about whether you need to have an inactive or dynamic system. Effectively oversaw mutual funding are costlier, as they are overflowing with charges, can remove a piece from your speculations, and may likewise prompt duty occasions. For instance, there might be shared asset appropriations that you want to report and pay charges on. At the point when you put resources into common assets, you can get capital additions disseminations along with profit installments. This could be something to be thankful for, yet there may likewise be charge suggestions. Contingent upon what your shared asset chief does, it could prompt higher assessments due to the distinction in property. At the point when you sell a resource, you're supposed to make good on capital increases charges in the event that you hold the resource for longer than a year, and there is an expansion in esteem. Assuming you hold it not exactly that, you'll be charged at the normal pay rate, which is higher. Inactively oversaw mutual funding, for example, record reserves. Try to reproduce market returns of a specific list, for example, the consistently famous S&P 500. They are more reasonable for financial backers since there are lower charges as there's not a substance that is dealing with the venture as you're overseeing it yourself. As a rule, effectively oversaw reserves don't really outflank latently oversaw assets over the long haul. To consider the effect and costs, you can utilize the Fund Analyzer device by the Financial Industry Regulatory Authority, or FINRA. You can likewise take a gander at the Shared Assets Plan to get a breakdown of charges, dangers, and in general execution. For both dynamic and latent common assets, you additionally need to consider the cost proportion, which incorporates costs connected with dealing with your record. Step 4. Invest in mutual funding. In the wake of exploring sorts of mutual funding and picking a system, you need to begin putting resources into common assets. At the point when you put resources into common assets, you buy shares from a financier or from the genuine asset. The amount you wind up paying will fluctuate in view of the business charge or deal's load as well as the asset's net resource esteem per share. You might have the option to put resources into common finances that don't have a deal's load related with them too. To get everything rolling, pick a business or organization to put resources into mutual funding. You can look at a few well-known choices like Fidelity, Vanguard, Charles Schwab, and eXchange. Prior to opening a record, make certain to audit the outline and any fine print, and furthermore, consider the following. Any record essentials required. Ease of use of site and versatile application choices. Reserves that are accessible. Absolute expenses, for example, deal's burden and cost proportion. After you open a record with a business, store cash into the record and afterwards select the common asset you need to purchase and buy shares. Make an arrangement to include reserves a normal premise, like every month, and survey your presentation as you go to check whether any progressions ought to be made. If you have any desire to get everything rolling putting resources into mutual funding, the primary things to know about are dynamic versus latent techniques and the costs that can accompany every decision. Your decision will decide the amount you pay, and furthermore, in the event that you take an involved or hands-off approach. Putting resources into mutual funding can be a simple method for differentiating your portfolio and furthermore offer a direct reclamation process if you have any desire to recover your portions. So here you go, folks. That is the start of interest in mutual funds that can cause you various advantages and financial effectiveness. I hope you all enjoyed the video and gained some new useful knowledge. Make sure to smash the like button. Do press the red subscribe button and snap the bell icon so you might get all of our new video uploads right away. That is all there is to it for now, and I'll see you all again.